2022 deja vu. The markets are stalling at a critical level. Markets are bouncing between highs and lows, but failing to commit, and a pattern that looks eerily similar to 2022, just before the slow motion bear market decline. For now, I'm staying patient, hedged, and waiting for the market to confirm its next move. Stay tuned for a fun stock market fact. We speculated on Monday that there was going to be a lot of stock market noise. It's bouncing around, and that's pretty much exactly what we're seeing as we close out Tuesday and come into Wednesday's market movements. We can't really commit to one direction or the other, and we're pretty much yo-yoing around. One thing that we do have on the bull side of the ledger for a little bit of bullish bias is we are overextended on ADD, and we could see price push higher initially before we see any further potential declines. I'm leaning a little bit towards bearish on my personal viewpoints, but the chart is essentially neutral. It's not giving me any clues in either direction. I'm hedged and essentially waiting for the market to move in any particular direction. Again, the bullish scenario is, we've got some short-term bullish opportunities. The other thing that we have on the bear cycle is we're in that February-March correction cycle. We could see, a fast move down in a short space of time, anywhere up to 10 to 15%. Would be typically expected in this type of scenario. And given all the political upheavals with the trade war tariffs, that's suddenly become a realistic possibility where we could see the big correction cycle as a part of this seasonal trend that we often see at this time of year. Again, I'm staying hedged so that in either direction the market moving is fine. I need to be patient and avoid impulse trades. So don't rush in too early this week, because we could get chopped up in the indecision. Again, we don't really need to worry about being stopped out with our systematic process, just with the way that we trade options and option spreads. So it doesn't really matter which way the market goes, doesn't matter how volatile it gets. We're not being stopped out in that traditional sense while we wait for some profits to come about from, again, a movement or just the time decay from the income trades that we have. Here's a fun fact. Did you know the biggest stock market rally in history happened in 1933 during the Great Depression? The Dow jumped 15.34% in one day as traders piled back in after months of panic selling. Even in the worst market conditions, there are massive opportunities, but only for traders who stay prepared at the right moment. And if you're tired of watching the charts all day, what if you could pop a trade on, walk away, and let it do its thing with mechanical rules, no trend chasing, just trade for income without stress. Again, even in a flat market, we get paid with no more guesswork. We can get trading smarter today. So if you'd like the sound of that and want to learn more about it, then click the link next to this video. You'll be taken to a free video where I outline one of my favorite money-making patterns. So click the link and I will see you over there.